Hello everyone and welcome to the weekly market update. I am Al Makarim, market analyst at ICM.com, and I'll be sharing with you my insight for the week. So first we are going to start with the developments of the COVID-19, talk about the US and China tensions, highlight the key economic releases and events for the week, and finally go over some of the major charts. So first to start with the COVID-19, the confirmed cases surpassed 4.7 million. The recovered cases are at 1.75 million, which is around 37% of the total confirmed cases, and the deaths exceeded 300,000. Today, South Africa reported its highest daily increase in cases. Also in Brazil, the Sao Paulo mayor warned about the situation, stating that hospitals are near collapse. Also, India extended the lockdown for additional 2 weeks. So this is on the negative side. The World Health Organization assembly is going on today. Around 122 countries submitted a proposal for an inquiry into the origins of COVID-19. Also speaking at the assembly, the Chinese President Xi asked for more political and financial support to the World Health Organization, especially after the attacks from Trump administration. Also, he urged to keep supply chains open. So this is for the World Health Organization assembly. On the brighter side, the death tolls fell in the UK, Spain, and Italy. Also, what was moving the market for the past 2 hours, Moderna has a candidate vaccine, so they announced positive results for the first stage of the trials, and expects to begin the final stage of the vaccine trial in July. This is a very optimistic view from Moderna, which gave the market a little bit of a boost higher, especially the risk on sentiment. So this is for the coronavirus. Now we move to the US and the China tensions, which started a new round following the virus outbreak. Peter Navarro, which serves as an assistant to the President Trump. Also, he's the director of trade and manufacturing policy. He accused China of seeding. He used this term, and exactly seeding the pandemic by allowing outbound flights to the rest of the world. So he said that China should have stopped flying the flights to other countries in order to avoid any transfer of the virus, but this didn't happen. So he's blaming China for this. Also, last week we heard a lot of talks about the probability of the trading deal falling apart, especially as Trump continued to offend China. However, Larry Kudlow, which is the White House economic advisor, he stated that the deal will not fall apart. However, Trump also, he stated again that he's not thrilled with the deal. So Trump is being on the offensive for the past couple of weeks against China. So this is for the trade deal. The U.S. Commerce Department, this is the latest developments. The U.S. Commerce Department restricted Chinese companies' access to American-made chipsets. This was mainly seen as an effect to stop Huawei from accessing these chips. So it was a direct offense to Huawei. China is willing to put U.S. companies on unreliable entity list as a retaliation. Some of these companies could be Apple and Cisco and Qualcomm. So this is a new round of tensions between China and the United States. Things are heating up, so we could see some effect later on the market. So this is for the US-China trade tensions. Among the key movers last week also were Powell's comments. He spoke 2 times last week, once during the week and one yesterday. So he warned about the economic outlook and the downside risks. However, he expressed the Fed's commitment to do whatever it takes to support the economy, and stated that the Fed has numerous tools to use in order to support the economy. Among the key takeaways, or the things that were the most important thing that the market participants were waiting for, was his comments on negative interest rates. He stated that the Fed currently is not considering, he stated that the Fed is not considering negative interest rates. So also he made sure to repeat that yesterday, because this would have a lot of impact on the market. Market participants are really watching this closely, the future path of interest rates. Some of the top banks around the world, they stated that if we witness another round of the COVID-19, the Fed will be forced to reconsider negative interest rates. So this is the dilemma here. If we were able to recover from the COVID-19 and even go further by avoiding having a second round, maybe the Fed would not be urged to use the negative interest rates, and the tools that he already used could be more than enough. So it depends all on the span of the coronavirus. He also stated that yesterday that the economy will recover gradually, but the full recovery depends on reaching a vaccine, and this could take till 2021. So everything is related to what's going to happen with the COVID-19, whether we're going to find a vaccine or not, whether it's we're going to face a second round or not. So it's all depending on the coronavirus. So now let's pinpoint the top economic activities this week. It's a very busy week. We started earlier on Tuesday with the minutes of the last Reserve Bank of Australia monetary policy meeting. Then we have the Japan's March industrial production, a contraction of 3.7% expected. We move to the United Kingdom with jobs figures. The average earnings index for March, expectations of 2.7%. Unemployment rate also for March, expectation of a slight rise to 4.4%, while the claimant count for April, which is the newest, a significant rise of 150,000 claims due to the lockdown and the impact of the coronavirus on the labor market in the United Kingdom. The Eurozone Economic and Financial Affairs Council will be meeting on Tuesday. But then we have the German ZEW economic sentiment for May, expectations for a pickup of to 33.5 from 28.2 previously. And then we move to the United States. We have some housing data ahead of the United States US Open. So we started with the building permits, a drop to 1 million from 1.35 million previously, and also housing starts, a drop to 0.95 million from 1.216 million prior. So these are the data. Then the key event of the day will be Powell's and Mnuchin testimony. They are testifying on before the Senate Banking, Housing, and Urban Affairs Committee in Washington, D.C. So their words will be followed up closely by investors. And we end the day with the weekly crude oil stock by the American Petroleum Institute. On Wednesday, inflation figures will be out. Starting with the United Kingdom, the Consumer Price Index dropped by 0.1% in April. Producer Price Index which would have a bit of significant impact on the Consumer Price Index on the long run. Also expectations of a sharp drop by 4% in April. German Producer Price Index is a drop by 0.7%. Moves to the Eurozone CPI Consumer Price Index month-on-month. April, a slight rise by 0.3% versus previously 0.5%. The Canadian CPI figures also for April has dropped by 0.6%. And then also a key event on the day, Bank of England Bailey will testify along with 3 Monetary Policy Committee members on the economic impact of COVID-19 before the Treasury Select Committee. So also their words will be monitored closely, especially after some reports showing that the Bank of England could consider negative interest rates to support the UK economy. The Eurozone consumer confidence for May, a slight drop to negative 23.4 from negative 22.7. Then the weekly oil report by US Energy Information Administration, a rise by 4.147 million barrels. Last week witnessed a drop by 745 million barrels, which was the first drop since January. And then we have also a key event. The minutes of the Federal Reserve will reveal the minutes of the last monetary policy meeting, and we end the day with the Japanese trade balance with a forecast of a deficit of 560 billion Japanese yen. On Thursday, we start from Australia, where the Reserve Bank of Australia Governor Lowe participates with the panel discussion. There will be market participants will be awaiting some questions on how will the Reserve Bank of Australia act to or react to the latest tensions between China and Australia also, and also if we have another serious round of tensions between China and the United States, which could affect the Chinese economy and also in turn affect the Australian economy. What are the plans for the Reserve Bank of Australia, and how will the bank act to save or to support the Australian economy? We move to the United Kingdom with the flash services and manufacturing PMI slight pullback. Also, the US weekly jobless claims, a rise of 2.425 million as expected. Philly Fed a negative 45 versus negative 56 previously. US market manufacturing and services PMI for May Also a slight rebound. US existing home sales dropped to 4.3 million from 5.27 million previously. Powell will be also speaking at the Fed Listens event on COVID-19. Market participants want to know more also clarifications on the future, as we said, on the future path of interest rates. So any words on interest rates will be watched closely. The Q1 retail sales figures from New Zealand dropped by 1.5%, and Japan national core CPI dropped by 0.1%. On Friday, the UK retail sales for April will be out. Expectations of a sharp plunge by 16%. Manufacturing and services PMI from Germany and the Eurozone as a whole also pointing to a slight recovery in May. ECB monetary policy meetings, meeting minutes will be out since on Thursday it's a bank holiday in Europe. And finally, the Canadian retail sales figure a fall by 10%. So these are the key economic events to take place this week. Now we're going to move to the MetaTrader 4 to talk about the key to have some analysis on top pairs. So first we're going to start with the dollar index. We are still trading inside this consolidation zone for a while on the dollar index. Especially last week we witnessed some relief as Powell denied or stated that they aren't considering negative interest rates, so we witnessed some relief. Also, there was some tensions and a drop in risky assets. This triggered demand for safety for the dollar safety. However, amid improved risk sentiment today, we saw the dollar giving up some gains, and it's dropping. You can see a clear drop if we go for the daily chart. Also a clear drop, removing all the gains earned for the previous 2 days. So this is for the dollar index. If we have the hourly chart, investors should have, or traders should be looking carefully for any break below this trend line here. So maybe around 99.70 initially, and then they should look for some support at a drop towards 98.74. So this is for the negative scenario, and the mid positive scenario. This is the key resistance here, where we witnessed the reversal last time. So we have a key resistance at 101 level and an interim resistance near 160. So this is on the positive, in case of a positive scenario. In case of a reversal for the dollar, again to the high levels, we have to watch out for resistance near 100.60 and 101. And in a negative scenario, we have to look for some support near 99.75. And lastly at 98.74. So this is for the dollar. If we apply some of the technical indicators here, we can see that the dollar index on the hourly chart, it is trading below the 200-hour exponential moving average, again below the 100 and 200-hour. Here we found a little bit of support, but now the price is traded below it and rebounded when the RSI dipped to 30 level. If we move to the euro, we have also exactly the opposite movements. So here on the weekly chart, we can see that the euro was weakening for the past 2 weeks, and then here we have a slight rebound. On the daily chart, it is clear that we're moving. We have a pretty good candle pointing to good gains today. Also on the hourly chart, we're trading above the previous high reached on Friday. Currently, if this is going to continue to the upside, so you have to look for some resistance near the previous high of 108.90, almost near this level, 108.95, and again at the top point of, excuse me, on the top point of 110.14. This is the previous high. So this is for a positive scenario on the euro dollar, and in case of a negative scenario or a move down, again we have to look for a break of 107.70, and then we'll have to look for some minor support again at 107.24, and then the key support comes in at a low of 106.20. So this is for the euro dollar. It's very clear these are the support levels and the resistance levels. Minor support, another support comes in at 7.25, and again the key support is at 106.30 almost. For resistance levels, we are going to look for 108.95, and on the top side from 110 level. So this is for the euro dollar. If we move for the pound, we're witnessing some correction today after having drop for the past 5 days. So if we go for the weekly chart here, we can see a slight a sharp drop last week, and today we are in the recovery mode. So a clear recovery If we go for the hourly chart here, we can see a series of rising candles. So you have to look for this trend line, which was which combines the highs of the latest swing lower. Um, Also for retracements, you have to go for the Fibonacci levels for any retracements in order. If you believe that the market's going to continue to the downside and you want to look for entries, short entries again, so you have to look for retracement levels. Some key level could come in at 122.70. So this is for the pound. You have to monitor closely any move back above the support zone of 122.43. So this was this was the previous low, so we have to look for this level. Any trade above this could be taken as positive move, and then we could witness another move to. So we have this one, the first 22.40, and then this move could lead us higher to an interim support of 24.70, and then the resistance, the third resistance or the top resistance comes in near 26.50 level. On the downside, we have to draw the Fibonacci retracement here, and we can check for some support zones. The first one comes in at 120.30 and again at 118.85. As long as the Bank of England moves forward with applying or adopting negative interest rates, the pound could find some pressure against peers. Also, we have the failing or disappointing rounds of Brexit talks. Michel Barnier last week, who's the head of negotiations for the European Union, he stated that they had a disappointing round of talks, which was negative for the pound pairs. So also you have to keep in mind this could come in as a key catalyst or key mover for the market in the coming weeks. So this is for the pound yen. If we go for the dollar yen, the recovery is continuing. On the weekly chart, we had this reversal last week, so we had this reversal candle, and then we had another candle up, a slight movement, but it's still a little bit strong. So here we were trading in a consolidation zone for the past couple of days. Now we're trading higher, aiming at the previous high near this level at almost 107.80. So you have to look for some resistance at 107.70, 107.80, and then near the previous resistance zone of 108.10, 108.15 level. These are the two resistance levels to watch out for. Any break above these two could open up a move towards 109, 109.40. And on the downside, for any negative scenario, you have to look for a breach of the 106.75 support zone, which could take us the previous lows of 106 level. So this is for the dollar yen. To recap, you have to look for resistance. On the positive scenario, resistance could come in at 107.80 and 108.10 between this area, and then the key resistance comes in at 109.30, and support is seen towards lows of 106.75 and 106 level. If we do use some indicators here, we can see that the Bollinger Band is opening again, and the price is moving away from the 100 and 200-hour exponential moving average as the demand for yen safety is vanishing as long as the market is moving, is preferring the risk bias. So let's move to the Australian dollar, which had tough sessions last week on tensions, especially between China and the United States. Also, the demand for safety forced investors to rush also to safer currencies and abandon commodity currencies. So on the weekly chart, we witnessed a clear bearish candle. However, today we are recovering as risk sentiment is in boost. So this is for a clear reversal here. If you want to look for some resistance on the hourly chart, you have to look for any for resistance near the previous high of 65, 60 almost, which was the previous top, and for support you have to look for a break below the key level of 63.80, maybe some interim support or some minor support near this low of 64. So this is the support zone, and for resistance you have to look for 65, 60 almost, and again at a very optimistic view, we can look for higher resistance, maybe near 66, 66.75 also. So this is for the Australian dollar. These are the key resistance levels, and this is the support zone the first support zone to be tackled, and then we have another support to come in at 62.40. So keep in mind these levels for the Australian dollar. The Canadian dollar also got some. The Canadian dollar moved strong. It was stronger against the US dollar, so we witnessed a drop in the pair as their sentiment today, enhanced risk sentiment, boosted the demand for commodity currencies. So we saw a reversal in and the movement, but still on the bigger picture, we are trading inside the consolidation zone. So we're trading inside this range also almost, and from the bottom near 38.53. So we're still trading inside this consolidation zone. So for any positive scenario, you have to look for a break above the previous high of 41.70, and again at 42.60. And for some support, like a medium support, we have to look for a break below this level, today's low, which was almost 140. A break below 140 could trigger another leg lower towards 138.53. So these are the support zones and the resistance zones for the USD CAD. We are still trading inside this consolidation zone, awaiting some fresh fundamental drivers, some catalysts in the market in order to move either lower or higher. So depending on the catalysts and the break. Also, the New Zealand dollar is recovering after having the sell-off last week, as the Reserve Bank of New Zealand almost doubled its quantitative easing amount. So we're witnessing a recovery today. However, you have to look for some resistance near high of 61.77, and again, the previous the lower support could come in at 61.30. So maybe this area here between 61.30 and 61.75 could have some key resistance in the market. And for supports, we found support here near the previous the lows reached mid-April. So the market rebounded from here. So any retracement for this level could provide some support, and additional support could come in near a low of 58.40. So these are the key levels for the New Zealand dollar against the US dollar: 61.30, 61.77, and support at 59.10 and 58.40. So these are the key levels for the New Zealand dollar. The New Zealand dollar, we're trading inside this channel here, and currently the market is moving back into it. So just be careful for trading this pair. We'll move to gold, which had a really good rally last week and also is moving today. After going to its highest level since 2012, we witnessed a little bit of reversal as investors favored riskier assets. So this is for gold. We are trading inside this triangle here. So we were trading this consolidation zone for almost from the beginning of April till the mid of May, and here we had a pretty cool breakout, and the market moved higher to form this almost this channel. So it's almost at the same top, and now we're trading to any break below this zone. And this is the key point, the middle point, 1723. So this could act as good support. But any break below this could open the way lower towards a drop towards 1700 and maybe 1700, 1676 in the future. And any retest for the highs could open the way for further highs towards 1790 almost. So this is for gold prices. You have to watch out carefully for any break below 1720, especially as risk sentiment improves. So we witnessed this reversal, all this reversal that happened for the past 2 hours. Here, the 1 and 2 following Moderna's announcement on the vaccine. So you can see how much the market is sensitive to any positive news regarding any vaccine. For silver, the silver had moved sharply last week. We had this resistance, almost this consolidation zone for a while, and then we got this break higher, trading near 1760. So for support, we have to look for a drop back towards 1584 at a stronger pace, and for retracement for the whole move, now we're trading at 23.6. For retracement for the whole move, you have to look for maybe near the 38.2 retracement, which is 1640. So you have to look out carefully for these levels. So some support could come in at 1640 level gonna highlight it, and again near the previous top of 1580. And for targets on the upside, we faltered exactly near the high reached in early March. So this was the high at 1755. So any break above this high could open the way higher towards a higher resistance of 1890. So this is on the positive scenario for silver. Any break above the high of 1750 could open up the way for another move higher towards 1890. And on a retracement, we have to look for level 1640, and again at 1580. These are the key levels. For silver, we go for oil prices. Now we're trading a new expiry, the July expiry. So we have to the oil prices were positive for the past week due to as some countries are reopening their economies. So this had a little bit of positive movement or positive effect on demand levels. Also, let's not forget that OPEC Plus or other private and public producers, they are also lowering their production. So this is supporting the market to stabilize a little bit. So if we're gonna look for some of for some levels for retracement, we're gonna have a closer look on the hourly chart. So we could find some resistance near this high here at 34.36, which is almost $2 away, and again at 36.58. These are the levels that reached, or the highs reached post this significant gap. So they could have some importance. So 34.30 and again 36.64. So for resistance and for support, the 30 psychological level is key support, and also below it we can find some support additional at $27, which acted as resistance for a while on this contract. So these are the key levels for trading oil prices this week: 34.30 and 36.60, and support is 30.50 and 27. Then this is for the support. Now let's move to the Dow Jones. A clear move higher. The Dow Jones had a quick reversal last week on Thursday. So the market was moving down, and then we got this quick reversal, a little bit of a correction. Now we're moving higher again. We're finding some resistance near this level, so we have to watch out for any price action here near 24,460, and the next resistance comes in at 24,800. A break above it could open the way towards higher movement to close the gap at 25,150. And on the downside, the key levels on the downside are a little bit far away. 23,300. We need to break below 23,300 again to have a little bit of a negative bias again, which could drive us lower towards 22,600 and maybe retest this low. So on the negative scenario, you have to look for 23,300, 22,700, and 22,200. And on a positive scenario, we have to look for a break above 24,460, almost the previous high, and then the April's high at 24,800, which could open the way towards a move higher towards 25,140, which was almost the gap opened on in early March. So this is for the Dow Jones. These are the key levels. If you have any questions, please write them down so I can answer them. I just would like to remind you that all the information mentioned, or all the levels, all the analysis mentioned in this webinar are only for educational purposes and shouldn't be taken as signals whether to buy or to sell a certain financial instrument. So they are only for educational purposes to support you on your trading, on how to analyze the markets, and they shouldn't be considered as signals. So if you have any questions, please write them down. Okay, so this is all for today. Thank you for joining. On Wednesday, we have an educational webinar to talk about candlestick patterns, so make sure to register. And if you need any support, please send us an email on webinar@icm.com or at support@icm.com, and thank you.